I've been trading options for about 6 years now. And in those 6 years, I've learned a couple things. Here are 5 things every option trader should know. If you follow these 5 simple tips, you'll avoid common beginner mistakes and start off on the right foot. By the end of the video, you'll know exactly what to look for when choosing an option contract so you don't waste any money on bad trades. This video is specifically tailored to Robinhood, so if you're a Robinhood user, sit tight. Let's get started with the video. Okay, so first things first, I want to teach you guys how I set up my option chain. You can customize it on Robinhood. If you open up your option chain for any stock or ETF, you're going to see at the top right corner, you'll see an edit icon. You want to click on that edit icon, and basically what that's going to allow us to do is we're going to allow to change the metrics. So for the buy metric, we're going to have volume and delta. For the sell metric, we're going to have volume and open interest. I'm only going to go over the buy metrics, but for the buy metrics, now it makes it much easier for you to be buying contracts with volumes and with deltas. That is very important because volume is essentially what's going to allow you to go in and out of a position much easier. A lot of times beginners will buy contracts that have little to no volume, and when they finally are up in that position, they can't sell. Or worse, the position doesn't go their way and they can't sell. Now, volume is very important. That's one of the tips I want to consider. Always keep in mind the volume in the contracts. Low volume, don't buy the contract. High volume, it's a good sign. Tip number 2, along with the customization, is to watch out for volume. Volume is important. Tip number 3 is going to be to watch out for the delta. Delta is how much money your contract's going to make you for every dollar that has gone up. So if the delta is 50, you're making 50 cents for every dollar that has gone up while you're holding that contract. It's important because you want to be able to calculate how much you're going to make per contract. Now, for those who are scalping, delta may not be as important. However, if you are trading leaps, if you're holding on to them for longer than 3 months, delta is crucial because if you're investing in an option contract and you have money, you want to make sure you're profiting the most possible from every movement. Now, tip number 4 is going to be implied volatility. You never want to overpay for your option, okay? And knowing what IV is going to help you determine if you're overpaying or underpaying. Have you ever tried buying concert tickets like right before a big show? The prices skyrocket because everyone wants that ticket. IV is very similar to that. That's exactly how implied volatility works in options. A high IV means overpriced contracts. Like expensive last minute tickets. Low IV is cheaper contracts, like buying tickets in advance. If IV is high, you're probably paying way too much for an option. And even if the stock moves in your favor, you're probably not going to make much money because of that IV. So before buying an option, check the IV. If it's super high, you might want to wait for a better price or consider selling options instead of buying them because high IV is actually pretty good if you want to sell options. Like, if you guys are enjoying this video, leave a like down below or subscribe to the channel. We are dedicated to just helping new investors. Whether you option trade, you trade crypto, you trade Forex, join this channel because we are open to helping new investors. If you're an experienced investor and you want to help out, leave a comment down below. Contact me. My email is in my channel. We can work together to make content for new investors. Tip number 5 is open interest. Now, open interest took a while to understand. So I'm going to do my best to try to explain it the best way possible. Imagine you're driving through 2 neighborhoods. One has tons of cars moving around it, right? Meaning a lot of people are active. The other is a ghost town, no movement. Let me ask you this. Which one would you rather be in if you needed to sell something quickly? Options work the same way. Open interest tells you how many contracts are still open. You see why it's very important to always check the open interest. High open interest is like 1,000 plus contracts. Anything 1,000 plus in interest is good. It means there are plenty of buyers and sellers. It goes hand in hand with volume. Low open interest means you might get stuck with a contract you can't sell, unfortunately. So before buying, always check these crucial tips. Check open interest, check your delta, check your IV. Make sure to have the metric set so you can check whatever is important to you. Another quick tip, and I'm going to give you just another 2 quick tips. because there's so much more I can say regarding options, okay? But always look at the high and low. When you're looking at option contracts, you can see the highest point this contract was going for and the lowest, and then compare what the price is for the contract now so you can know if you're buying high or you're buying low. That's the simplest tip I can give you guys. I hope this helped you guys in some shape or form. If you have more questions, please do not hesitate to comment down below, and I'd be happy to make videos on it. Thank you all for watching. Let's like this video so more people can see it. Young investors, we're here to help. We're here as a group. Let's make it happen. Good luck, everyone, on your trading journey.